Let's talk deducting business travel costs, and it's also gonna relate to rental costs, but mainly we're talking about business travel costs right here. And we're gonna go through the broad overview first on how we're gonna introduce this to the client, letting clients know like, hey, if you're gonna deduct travel costs, this is what you need to know, like the kind of like the essential stuff. So let's go through the who does it apply to? We want to make sure clients know that, hey, it's going to apply to business owners only. And I emphasize this because we used to have employees be able to deduct travel costs if they paid out of their pocket and it wasn't reimbursed by their employer. But with the Tax Cut and Jobs Act, they disallowed that. So employees cannot take any travel deductions anymore. So this is really mainly for business owners that have businesses, or I guess rental property owners that have rentals. But remember, we're talking about mainly about Schedule C business owners, maybe Schedule S as well. So we want to make sure that clients understand this is for business owners, not Schedule S corps. So we want to make sure that clients understands that this is for business owners only. And the next thing we're going to talk about is what is this? And we're just talking about deducting travel expenses. And with travel expenses, there's a bunch of different, I guess, categories of expenses that will fall under. So you have airfare, you have hotel, like Airbnb as well. You have cars. So this is car rental, Uber rides, Lyft rides, train, taxis. And you also have meals that's going to be incorporated in along this travel cost. So we want to make sure clients understand that there are a lot of expenses that can qualify under travel, and we want to make sure that we capture all of those. The next one is why. Why are we doing this? Well, of course, it's going to be for tax savings. We want to make sure clients understand that they're getting the most tax savings possible. And the way I like to explain it is that, hey, if you add up all of your travel costs, for every $1,000 that you spend, you're going to save, say, $220, assuming they're in the 22% bracket, right? So, hey, you spend $1,000, you're going to save $220 on your taxes just by deducting this. So that's the why. The next one is when. When do clients need to do this? It's really tracking throughout the year. And I recommend to be proactive when it comes to every time they travel, they proactively make sure that they save the receipts, they write down the reason for the travel. And we're going to go through all the necessary important documentation that we need when it comes to deducting travel expenses. But really, clients should be doing this throughout the year. And then the other thing is also the when is when to report this is going to be reported on the actual tax return filing. So whenever that is due, we want to make sure we get the total. And then where do we need to be, what is it that we need to be aware of when it comes to the where? And there's two things. There's a special rule when it comes to traveling domestically, so within the United States, and there's a whole separate rule when it comes to deducting travel outside the United States. So we want to make sure clients understand that as well. And then where to report this? We report this as a line item under travel expenses on the expense sheet. Now let's talk about the business travel rules.